Turning now to this week's Money Monday. Today we're looking at the hot housing market and the soaring price of homes. The median new home price in November was more than $400,000, more than $350,000 for existing homes. CBS News business analyst Jill Schlesinger is here for you now with more.
The housing market has really shown huge gains in both activity and prices. We know that. But you're right. It is a supply issue. If you look at this, the number of existing homes, that's houses that have already been built, right, that are for sale, that inventory is down 13.3% from a year ago. That means that a typical house in November sold, are you ready for this, in 18 days. 83% of homes sold within a month. So this is a hot market still. It is starting to taper off a little bit. So we are expecting prices to ease off a little bit, and activity is going to continue to ease off this year. We are in a hot housing market that is starting to taper off, but it is still very difficult to find a house. Again, it's that supply issue, but it's also demand, obviously. If you look at the activity numbers and we look at the year 2020, we came into the year before COVID with not that many houses on the market and not that many houses being built. Then there's this huge surge of demand, not a lot of supply, and boom, you have high prices. Unfortunately, if you're looking for a house, I don't think that condition is going to actually change anytime soon, but we are seeing prices start to slow down just a little bit as more homes come on the market and also as mortgage rates start to creep up. When you hear these price increase numbers, it's very easy to take ourselves back to the mid-2000s and freak ourselves out. I don't think we need to be as concerned, simply because if you look at that period of time, there were people getting loans with no income, no documentation, huge amount of borrowed money to bet on the housing market. Today, we're actually seeing a large portion of all cash transactions. In fact, borrowers are finding that they really are in back of those all cash transactions. So I think that there's a frenzy that is based on supply and demand, but it's not piled on high with all that borrowing or leverage.